You ever feel like something big is happening in the background, but nobody on mainstream media is really explaining it clearly? Today's story is one of those moments, and if you stay till the end, you'll understand why silver might be standing at the edge of something massive. Just a few days ago, JP Morgan and US officials quietly sat down for an emergency-style meeting, and silver was right in the middle of it. That alone should make you pause, because these meetings don't happen unless something is already breaking behind the scenes. Before we go deeper, welcome to Bullion Alert HQ, where we break down what the headlines won't explain in simple English. If you care about your money, your savings, and the real story behind precious metals, hit like and subscribe right now so you don't miss what's coming next. Now, let me ask you something honestly. When was the last time the government rushed into a meeting about silver? Gold, maybe, but silver is usually ignored, which is exactly why this moment feels different. Silver isn't just a shiny metal sitting in vaults. It's used in solar panels, electric vehicles, medical tech, and military systems. When pressure hits silver, it quietly touches the entire US economy in ways most people never think about. JP Morgan has long been known as one of the biggest players in the silver market. Some people even call them the shadow giant of silver because their positions are so large that they can influence price movement. So when JP Morgan is suddenly connected to an emergency level discussion involving US authorities, it raises a very uncomfortable question. Is there a silver supply issue that's getting dangerously close to the surface? Think about this for a second. Silver demand has been climbing year after year. At the same time, mining supply hasn't been keeping up the way it used to. Now add inflation, geopolitical tension, and rising industrial demand into the mix. You don't need to be a Wall Street expert to realize that pressure builds fast in situations like this. What makes this even more interesting is how quiet the media has been. If this was about stocks crashing or banks collapsing, it would be all over the news. But silver moves differently, and that's exactly why smart money watches it closely. Big shifts often happen while regular investors are still distracted by headlines about tech stocks and interest rates. This is where the story starts to get uncomfortable. Because when governments step in, it's rarely to protect the average person. Historically, emergency meetings around commodities usually mean shortages, price instability, or fear of losing control. And silver, unlike paper assets, can't be printed when supply gets tight. The US relies on silver more than most people realize. From defense systems to clean energy, silver is a strategic metal whether it's officially labeled that way or not. So imagine being in a room where officials are realizing that silver availability might not match future demand. That's not a conversation you want happening quietly without public awareness. Here's the part that should really grab your attention. JP Morgan has been accused in the past of manipulating silver prices, and yet they're still deeply involved at the highest levels. That doesn't automatically mean something illegal is happening right now, but it does mean they know more than they're saying. Smart institutions don't wait until a crisis is visible to the public. They position early, move silently, and let retail investors react late. This is why I want you to stay focused all the way through this video. Because what's coming later explains why silver's next move might shock people who aren't paying attention. And let's talk psychology for a moment. Most Americans think of silver as cheap gold or just jewelry metal, but institutions don't see it that way at all. They see it as an industrial lifeline with monetary upside. When panic hits markets, people run to safety. Gold usually gets the spotlight, but silver has a history of explosive catch-up moves. That's why these behind-the-scenes discussions matter so much. They're not reacting to price, they're reacting to risk. Risk of shortages, risk of exposure, and risk of losing control over a market that's tighter than it looks. And once that risk crosses a certain line, things move fast. Now I want you to think about your own position, not as a trader, but as someone living in the US economy. Inflation already eats into savings, wages struggle to keep up, and assets feel increasingly disconnected from reality. That's why metals like silver quietly become relevant again. Not because of hype, but because they sit outside the system. At Bullion Alert HQ, our goal isn't to scare you, it's to help you see the full picture before it becomes obvious to everyone else. In the next part, we're going to break down what likely triggered this meeting, why timing matters right now, and what signals institutions might already be acting on. Trust me, this is where the story gets even more interesting. Before we continue, drop a quick comment saying where you're watching from in the US, because I want to know who's really paying attention. And if you think someone you know should hear this before it hits the mainstream, share this video with them now. When we look at timing, this meeting didn't happen randomly. It came at a moment when silver inventories across major exchanges are already thinner than most people realize. Public data shows registered silver levels have been quietly declining. That means less metal is actually available for immediate delivery if demand spikes. Now imagine large industrial buyers all needing silver at the same time. Solar, EVs, defense contractors, and medical manufacturers don't wait patiently when supply tightens. They secure contracts early, often quietly. And when that happens, prices don't rise gently, they jump. This is where JP Morgan's role becomes impossible to ignore. They sit at the intersection of paper markets and physical supply. If stress appears in physical silver, paper contracts suddenly become dangerous. That's when emergency conversations start happening behind closed doors. Most Americans don't follow the difference between paper silver and real metal, but institutions absolutely do, because that difference decides who survives a supply crunch. Paper silver works fine when trust exists. When trust fades, everyone wants the real thing at the same time. That's the kind of moment governments fear, because once confidence breaks, it spreads fast. The US financial system is built on confidence. Silver shortages may sound small, but they can ripple into energy, defense, and manufacturing costs. Now let's talk about why this matters specifically right now. Interest rates are high, debt is massive, the system has very little margin for error. In moments like this, commodities stop behaving normally. They start reacting to stress instead of logic. Silver has a history of staying quiet for long periods. Then suddenly, it moves faster than anyone expects. People often miss the early phase because it looks boring. That's usually when positioning happens. By the time headlines scream about silver shortages, most of the upside is already gone. That's why understanding the signals matters more than timing the top. One of the strongest signals is silence. When big institutions stop talking publicly, something is shifting privately. Mainstream media hasn't explained this meeting in detail. That silence itself is a message. Another signal is the sudden focus on strategic materials. Governments don't casually reclassify metals unless supply risk is real. Silver may not officially be labeled strategic yet, but the behavior around it suggests it's being treated that way. Now I want you to picture the average American household. Groceries are expensive, rent is high, and savings feel fragile. In that environment, people start paying attention to assets that don't depend on promises. Silver fits that category, not because it's perfect, but because it's real. It exists outside digital screens and policy decisions. That doesn't mean everyone should rush blindly into silver. It means awareness matters more than hype. At Bullion Alert HQ, we focus on patterns, not predictions. Patterns tell us what powerful players are preparing for, and the pattern right now shows preparation, not panic. Preparation always comes first. The emergency tone of this meeting suggests stress testing scenarios. What happens if supply breaks? What happens if demand spikes? What happens if confidence drops? Those are not theoretical questions. Those are contingency planning questions. The scary part is that these plans are rarely shared publicly. The public usually finds out through price movement, not press releases. That's why this moment deserves attention. Because silver doesn't need massive demand to move, it needs concentrated demand. If even a few large players rush for physical delivery, the system tightens instantly, and tight systems break loudly. Now let's address the emotional side. Fear makes people freeze or overreact. The goal isn't fear, the goal is clarity. Clarity allows calm decisions. Calm decisions protect people from being forced into bad choices later. If silver stays flat, awareness still helped you. If silver moves sharply, awareness puts you ahead of the crowd. That's a win either way. Information is leverage. As we move closer to the end, ask yourself one honest question. Why now? Why would this meeting happen at this exact moment, not last year, not next year? Timing always tells the truth. The global system is stretched, supply chains are fragile, debt is heavy, and trust is thinner than it looks. Silver sits quietly at the intersection of all those pressures. That's why this story matters. If you made it this far, you're already ahead of most viewers. That tells me you care about understanding, not just headlines. Drop a comment below and tell me what part of this story surprised you the most. I read every comment, and it helps shape what we cover next. If this video helped you see silver differently, share it with someone who still thinks nothing is happening. Awareness spreads faster when people talk. Make sure you're subscribed to Bullion Alert HQ because this story is still unfolding. And when the next signal appears, you'll want to hear it early, not late. Thanks for staying focused till the end. Stay sharp, stay curious, and I'll see you in the next one.